I want to talk about taking losses, and for a big reason, really, because I think that this is going to help a lot of people out there. And I want to talk through an experience I had when I first started trading. I was long the US dollar against the Japanese yen, and there was a sell off in the stock market. And basically, what happened was the yen appreciated, it spiked, the dollar went down. Now, I was really bullish on this pair. I wasn't really thinking about what could go wrong. I was just thinking, it's on long term support, it's going to go up. Where do I take my profit? Do I take it here, or do I take a little bit here and let the rest ride? That was all I was really thinking about. I wasn't really concerned about the market going the way it did. I had quite a loose stop loss because I was so convinced this was a massively, it was on the weekly, the support line was a strong support line, and I was like, if it don't hold where I've bought, then it ain't going to go much lower. This is a no-brainer. It's one of those opportunities that you don't see that often. And obviously the sell-off in the stock market caused the market to fall. I had quite a loose stop loss, and I don't think I really worked out the impact on my account. And what I done was, I was watching the market, and this candle was just getting lower and lower and lower and lower, and I thought, I don't want to get stopped out because my stop is down here and the market's still here. And I was just watching this candle. I was thinking it might turn around, it might turn around, it might turn around. It don't look like it's going to turn around. And then I got out the trade, and it went all the way down to my stop loss and below my stop loss. Now, after that, it was very stressful. And I remember thinking to myself, that's it. I'm not going to be able to make a profit this week now because I've made one silly mistake. And I vowed to never let the market do that to me again. I was like, if I'm in a trade, the trade starts to go wrong, no matter how confident I was that the trade was going to be a good trade, I'm getting out. I'm keeping my losses small because I had to trade so hard just to make up for that one mistake. Now, I remember well, that week I was actually up because I traded so well and so hard. And it was the point where I got a confidence boost because I was like, I've just made back this massive loss and I'm actually in profit and I'm becoming a better trader because of that. And since then, I have never let the market do that to me again. I judge a trader not on their ability to draw charts, because there's lots of people out there that can draw charts, but it doesn't make them a good trader because their P&L is terrible. Yet they can draw trend lines, they know roughly where markets should go, but they just don't have the discipline. And I can tell whether you're a good trader or not by your account. If you are taking lots of small regular losses, you're probably a good trader. That is the first sign of a good trader, because that is what I will do. I will basically look at a position. If the market's going against me a little bit, say it's going down, I'm like, okay, that's fine. But you've got to prove to me now that I need to stay in this trade. And if it doesn't, I'm out. If the market goes up after, brilliant, that's fine. If it doesn't, I'm out. And I need to think of something called, I base my trading strategy on something called the law of large numbers. Now, I wrote about this in my book, Investment Economics and Risk. The law of large numbers, massive thing for trading strategies, because something that, when I get a trade, I cannot look at it and adjust what I do because I think it's going to suit this trade. I do the same thing every time. Every time I do the same thing because I know that my strategy works over time. And that's what you need to do. If you hold on to your losses, is that going to benefit you over time? No, it's not. Of course, you could get out of a very good position at a small loss and miss the market movement that you was expecting. It happens. But a good trader will be satisfied that, you know what, I'm doing the right thing over time. And that is what a lot of people that try to make it in Forex never really understand. So take small losses. The other thing to think about is, say I'm short in a market at resistance, it's that resistance is starting to head down, I enter short, and then it just turns around and goes up. I will get out of that market and I will be happy. Do you know why I'll be happy? Because the market has gone down, it's gone up. The fact that it's broke where I sold will expose a higher price. That means I can sell at a higher price. The market has just given me a better entry. That is the way to think about these things. You know, if you sell at a resistance, the market breaks up. Don't hold on to it hoping that the next resistance might hold, because in bull markets, resistances get taken out all the time. That's what pushes the market up. And if you're the wrong side of the market, you don't want to let that loss get bigger and bigger and bigger. Small loss. Watch what happens at the next resistance. Sell it. Then you can ride it down. Brilliant trading. That is what you need to be doing. So remember that. Don't take little profits and then hold on to losses and hope that they turn around, because it's basically you will be going up the stairs and down the elevator. That is what your P&L is going to look like. Up the stairs, so small little profits, doing well, building your account, massive loss because you're doing the wrong thing. You're holding on to losses. Get out the trade. Remember, the law of large numbers. It's the way that you trade. Stay constant.